Can a country unify its market without weakening its states? This tension defines the debate around the goods and service tax, a reform that promised simplicity but raised questions about fiscal autonomy. GST is a comprehensive destination based indirect tax levied on the supply of goods and services. It replaced a complex web of central and state taxes such as excise duty, service tax, VAT, and entry tax. Introduced through the Constitutional 101st Amendment Act 2016, GST created a dual structure which includes central GST and state GST for intrastate transactions and integrated GST for interstate trade. The core objective was to eliminate cascading taxes, create a unified national market, and improve tax compliance through a technology driven system. The why behind GST lies in India's fragmented pre reform tax structure. Multiple taxes across states led to inefficiencies, higher costs, and barriers to interstate trade. GST addressed these by subsuming taxes and ensuring seamless input tax credit across the value chain. It shifted the principle of taxation from origin based to destination based, meaning revenue accrues to the state where consumption occurs, not production. However, this shift has deep implications for fiscal federalism, that is, the balance of power and financial autonomy between the union and the states. Traditionally, states enjoyed significant independence in indirect taxation, particularly through VAT. GST altered this by pooling major taxation powers into a shared framework governed by the GST Council. This body, comprising union and state representatives, makes decisions on tax rates, exemptions, and rules through a consensus based mechanism. The constitutional answer to the conflict lies in cooperative federalism. GST does not eliminate state power but transforms it. States are no longer unilateral decision makers in indirect taxation. Instead, they participate in collective decision making. The voting structure ensures that neither the union nor the states can dominate entirely, requiring negotiation and consensus. This institutional design reflects a shift from competitive federalism to collaborative governance. Yet challenges persist. States have expressed concerns over revenue uncertainty, especially after the ending of the GST compensation period. Dependence on the center for compensation during revenue shortfalls has raised questions about fiscal autonomy. Additionally, the uniform tax structure limits states' ability to independently adjust tax rates based on local needs, potentially constraining policy innovation. At the same time, GST has strengthened fiscal integration by increasing transparency, widening the tax base, and improving compliance through digital systems. It has also reduced logistic costs and enhanced ease of doing business, contributing to long term economic efficiency. Thus, GST represents a structural shift in India's fiscal architecture. It balances the goal of economic unity with the principle of federalism, but not without trade offs. The success of this model ultimately depends on sustained trust, cooperative decision making, and responsive institutional mechanism.